depends on the age of the client and their specific situation. If they're still working and then they're going to retire and move, then we can maybe accumulate cash through income. Then we don't need to liquidate and worry about taxation on liquidation. If they're already retired, they've been retired for 3 or 4 years and said, hey, I'm going to move to Mexico, then we are probably looking at liquidating some investments at that point.
Welcome to the Retirement in Mexico podcast, your guide to a life of sun, sand, and possibility. If you've ever dreamed of spending your golden years under the warm Mexican sun, surrounded by breathtaking beaches, rich culture, and an exciting community, you're in the right place. We're here to guide you every step of the way with expert insights, inspiring stories, and everything you need to know to make your move with confidence. The best chapter of your life is yours to create. Let's do this. Hi, Lori. Welcome to the podcast. How you doing?
Great, Taniel. Thank you for having me.
No, thank you. So this is a topic I've been wanting to cover for quite some time. Finances. So before we start, why don't you share with us who you are, what you do, and where you live?
Great. So I live in Washington, D.C., and I started a firm called Fearless Finance in 2016 to bring hourly financial planning to everybody. Because right now, not only do most people not have a financial planner, when they do, that financial planner either sells products and gets commissions off the products or manages all of the person's savings. And, if you're doing that, you're not necessarily able to give your client not an unconflicted answer. An answer that's in their best interest. And I thought if you could get expert financial advice by the hour and you just got the advice and you could implement it, people would be much better off. And when we increase people's well-being, financial well-being, the whole world does better in general. So that's who we are and what we do.
Okay. And so have you helped American clients with their financing when they're talking about moving abroad?
Yes.
How does that conversation start usually?
Well, either we're having our check-in and they're clients that have been with us for however many years, or they're new clients, and we're talking about their goals, their financial goals. And what comes up usually is, I want to retire. Oh, by the way, I want to retire in Mexico. And I'm like, great, let's discuss it. And so the first thing is always to figure out in general, do the full analysis for retirement, and then layer on where they want to retire and what that means.
Okay. And what are some of the biggest financial mistakes you see your clients making when they're planning that retirement move to Mexico?
So what I see, and this holds true with lots of life transitions, not just retirement and not just moving abroad, which are both big life transitions, but I'm always stressing to people, you need to have accumulated cash for the transition. There'll be little things, security deposit, rental car, this and that. You just need to have cash to be comfortable because you want to get yourself there. You're not sure where you're going to live right away. You may want to try different neighborhoods and see what makes sense. And we don't want you to have the stress of, oh my gosh, how am I getting my check and how am I going to pay for everything? We want to take all that stress away, make sure you know what to do when you hit the ground.
Well, when you say they're not getting a check anymore because they're retired, right?
Sorry, it's an air quotes check. It's the distribution from their retirement. But yes, right. Yeah, it's funny because internally in our firm, we have a whole process for new retirees on how they place their check. And that's what I mean by that. So sorry about that jargon. Yeah.
No, it's okay. It's all about planning. That's the thing. And when I made the decision, I moved here in October 2003, but I made that decision 2 years prior. But at the start of 2003, it was like, okay, I need to kickstart everything because I wanted to plan everything in advance. So when someone's planning this big move, for me, I wasn't retiring. I was turning 32. So I was going to be working here. So my situation was a little bit different. But a lot of the clients that we have, they are retiring. They're baby boomers, or they're even right now we're getting a lot of Gen X people that are investing here, not quite going to retire. So I want to talk about the Gen X and I want to talk about people that are retiring. But how far in advance should they plan this? So if they say to you, Lori, I want to be in Puerto Vallarta at the beginning of November 2026.
Okay.
What should that journey look like? How many months in advance?
So that's great. I mean, that's giving me 14 months-ish, 15 months. And so what I would want a client to do is to sit down with me. Let's go through the whole retirement analysis so we know what that's going to look like. Let's talk about, do you want to buy a place where you move? Are you going to rent for a year and then buy? What do you want life to look like? How much money do you want to have set aside for travel? What are your hobbies? Maybe you're a golfer. I don't know, whatever you do. And let's make sure you have the money each month to do the things that you want to do. And then once that plan is put together, then we'll start talking about what I call runway, which is how much cash do you need to have available just to make the move and make sure that you are comfortable when you make that move. Sometimes it takes people 6 months, 8 months to accumulate that cash. So having 15 months to prepare, to save if you need to continue saving, to have that excess cash, it's excellent to do it that way.
Okay. I mean, do most of your clients have to liquidate some of their investments? Do you find that?
It's inevitable that happens. And it depends on the age of the client and their specific situation. If they're still working and then they're going to retire and move, then we can maybe accumulate cash through income. Then we don't need to liquidate and worry about taxation on liquidation. If they're already retired, they've been retired for 3 or 4 years and said, hey, I'm going to move to Mexico, then we are probably looking at liquidating some investments at that point. And hopefully they have some what's called non-qualified investments, which means not retirement investments. If not, we'll liquidate some retirement investments. And I'm always going to say to people before any big life transition, besides seeing me, you got to sit down with your tax preparer or accountant or whoever is your tax expert.
Well, question for you. I mean, how do you come up with these numbers though? I mean, are you asking them how much are you planning on spending per month in rent? What it's going to cost to move furniture? I mean, I can just imagine the list can go on and on and on and on and on. Like prescription and healthcare and how much are your utilities going to be? I mean, you're not going to know and I'm not going to know what cost of all this stuff is going to be in different parts of Mexico. So how long does it take to pull all these numbers together? And I mean, how do you work through this?
So typically it will take a couple of meetings. And, as I noted earlier in our discussion, we work by the hour. So there's no pressure. It would take a couple of meetings and it is expense by expense, Taniel. It is. We're going to say, what are your health costs? What are they now? Let's think about what they may be in another country because health insurance is different. Right? Mm-hmm. And what are housing costs? I urge people to look at housing costs in the areas in which they want to live. How much does it cost to buy a car and run a car and get insured? How much does it cost for you to, the amount of times you want to go out to dinner in a month or whatever it is? And we absolutely do sit there line by line because building it from the ground up is going to make the client more comfortable with the plan because it's going to feel more real. And that's what I'm after. Is making people as comfortable as possible with this transition.
When you sit down and go through this, I mean, are they overwhelmed, because you're kind of getting them real. You're having like a come to Jesus conversation, right?
That's what financial planning is. That's the financial planning way. I find in my experience that if you break it down into bite-sized morsels, it's far less overwhelming and paralyzing because, if I said to you, and this happens all the time, people Google retirement calculator and they sit there and they fill in their numbers into a retirement calculator and the calculator spits out, hey, you need $8 million. Yeah. And people just throw up their hands. They're like, forget it. Okay, this is
not happening.
Right? Yeah. So I find that if I can put it into bite-sized morsels where I'm like, okay, let's talk about your housing. Let's talk about running a vehicle. If it may not be something you need, I don't know. Let's talk about your hobbies. You like to garden. You like to golf. How much are we going to spend? And then you're getting them talking about things they're used to. And even though this would be in a new country, we're kind of thinking, oh, you're going to be retired. Right now, you take 2 trips a year and you're working, but you're going to be retired. I think let's put in 4 trips a year because that'll make sense. You'd be surprised how consistent people's behavior is no matter where they're living. And so, having experience with this, there's a lot I can bring to it of, I think we want to put a little more in for that topic area or that topic area.
Yeah. And also, when people are making this move over here, they fail to realize sometimes they're not a tourist. They're not on vacation mode. So going out to the fancy restaurants, when you're on vacation, you go to the nice restaurants and you're kind of, you're blowing the money, you're having a great time, and you should. You're on vacation. You worked hard your whole life, and now you got your 2 weeks vacation, right? But when you relocate, it's like, okay, you're now a local. You're not a tourist. You're a resident, right? So I think some people just kind of fail to make that shift, and they still wind up going to the fancy restaurants all the time, going to the beach and just kind of partying it up with all the other tourists. And then all of a sudden their savings is dwindling a lot faster. Have you seen people make that mistake?
Yeah, I mean, I've seen that mistake, and I've seen the opposite. I got to be honest with you. I've seen that mistake where people go and all of a sudden it's just a frenzy of spending, and they're new to retirement and they're just like, oh, let's go do that and let's go do this. And they can overuse their spending. And then I've also seen people who get into a real sort of, if you will, kind of a hoarding mindset. Well, we can't go out to dinner. I mean, what if we go out to dinner too much? And what happens, right? And so I find that I have to coach people on both sides of that continuum. Sometimes I'm sitting there telling people who have millions in net worth, yes, you can absolutely go for that bicycle ride and that coffee and that muffin with your friend. And then other times I'm like, let's slow down on the boat if possible, because doing the full retirement analysis is helpful, because using the kind of mathematics that we use at my firm, you're kind of given a number. This is how much you have to spend each month, net of taxation. And so if that's the case, people can grasp that, as opposed to a lot of times you go to a financial planner and they'll say, here's your plan, and it has a 75% chance of working. And that means nothing to anybody.
I mean, when you're giving them that budget of how much they can spend per month, are you factoring in the exchange rate in the other country and what the cost? I mean, that's tricky.
Yeah, you have to do that. I mean, if they're American and they've saved in dollars and their savings is in dollars and in accounts here in America, then the analysis is done in dollars and then moved into whatever the local currency is. And how much does that get you?
Yeah.
So they need to, as you rightly point out, they need to start thinking like a resident. Mm-hmm. Okay, I know I can live in this neighborhood for that amount, and I can have this kind of lifestyle for that amount. Yeah, that's right.
And then you got the fluctuation of the exchange rate. So, I mean, it could be like a yo-yo sometimes. The exchange rate for most of last year here in Mexico, like $1 was around 16 to 17 pesos, in that range. And then the end of last year, it hit 20. And now it's teetering between 18 and a half or so. That's something that you need to kind of really keep a track.
So there are two ways to hit that. One, and it depends on the country and the fluctuation and what's happening in that, policy area, if you will. But a lot of times we tell clients to take a year's worth of funding and put it into a local brokerage or bank account and have a transfer monthly to their main bank checking account. To be like their salary or their check, as I said. If it's where there's so much fluctuation that we think that they may lose out if they took a lot out in one go, then you would want to break down the time to maybe every 6 months or every quarter. I tend not to recommend that people do it on a monthly basis. First of all, the administration is high there, but also you can get caught in a rut, in an exchange rut there.
Now, yep, clients that are living on their Social Security checks, and that's basically all they've got coming in. What are some of the pitfalls and challenges with that? I mean, are they financially really vulnerable if their checks don't come in on time? And then, what do they do?
Yeah. So now, luckily, things are digital. And if you need to communicate with the Social Security Bureau, you got to tell them, this is my change of address. I'm living in a foreign country. And they do digital transfers at that point to the bank. And so you shouldn't have too much of a problem. Knock on wood. You shouldn't have too much of a problem. The thing that I tell everybody, I'm going to say it here too, you must tell Social Security that you're making a move, and Medicare and everyone else. Even if you still have a U.S. address, for whatever reason you might have a U.S. address, you must tell them what's going on.
So if someone is going to make a solid financial plan and retire here, and you said you want to give them small digestible steps. So can you just kind of give us like a little bulk? Like what would be step one, like the main things they need to consider first, and then step two, and then step three? And at what point do you feel, okay, you're good to go?
So again, if I have enough time, as you pointed out a few minutes ago, if somebody wanted to move, say in November of 2026, then I have enough time. The first thing to do is to do the full retirement analysis and plan and really see what we're working with here.
How long does that normally take?
Again, 2 meetings, 3 meetings.
2 or 3 meetings. Okay.
Yeah. And so are they living on Social Security, or are there more assets? Is there a house, an asset here in the US that either will be sold or be rented or whatever will happen with it? Where are we? What is the true context? And so that's the first thing, is to do the full plan and then have them gather some data if they haven't already. Some people are really on it and they like to do their things, but then I'll give people homework and I'll say, look, I want you to go down and talk to someone like Taniel and figure out what housing is like in Puerto Vallarta, if that's where you want to live. And what is it like? Go and spend 2 or 3 weeks and think of yourself living there and come back and tell me what you're spending and how much are groceries? How much is it when you go out as much as you want to go out? How much is gas? How much is a car to run? And so I like people to go and live it for a couple of weeks at least before and come back to me. And then we can adjust the plan and figure out what makes sense. Do they need to sell their house in the US? Can they keep it and rent it? And that we can only know once we know what they're going to be spending in the new destination.
So once someone is living in Mexico, how do you think they should handle like their money back in the States, like their bank accounts and credit cards? So, do you think they should start consolidating? Do you think keep things the way they are? What do you think?
So it depends. If the person has a house and, kind of is still keeping a toe in the United States, especially if they have that house rented, definitely I would want them to keep a U.S. bank account. Banks are funny about this. Each bank is different. You need to contact your bank and report to them that you're contemplating a move. That's regular FDIC insured commercial banks. That's what I'm talking about right now. And so you just want to let them know some of the bigger banks that are international, they'll be fine with it. And you can have your checking account in Mexico and you can have your checking account in the US, and there's no problem there. The smaller ones are not going to be happy about that. And you'd have to open another bank in Mexico, in Puerto Vallarta, and be able to do your local stuff. And so what you want is a bank that's going to be able, especially if you're somebody who's receiving a pension and receiving Social Security, i.e. receiving incomes in dollars, in US dollars, somebody that is going to be happy making that exchange on a monthly basis for you. And that's not all of them. It would be a simple search online for, I think my prompt would be expat friendly banks, and that would do it for you. But you're going to want to have a local bank account and maintain your U.S. bank account to the extent that you can. You have a U.S. address, etc. And if you can find one bank that does that, I think that's great, and that would be helpful. Brokerage accounts are slightly more complex. I don't know if you wanted me to talk about that too. Yeah. So people who have retirement accounts, IRAs and 401ks and straight up brokerage accounts, brokerage houses are regulated differently. And they have a lot of money laundering and all kinds of regulations. And obviously, I don't expect that anyone's doing anything illegal, but they have to go through all of that. And so a lot of custodians or brokerage houses don't want you to not have a U.S. address, and they'll just tell you they can't help you. And so, again, a quick online search or a thorough online search would help you with expat-friendly brokerage houses. And they would be able to handle taking the money in U.S. dollars, somebody who has an address that's outside of the U.S., and allowing them to still trade and transfer money. So it's possible to do. It may not be possible with your current brokerage house.
And this is all part of planning in advance. Instead of just coming to you saying, hey, I'm moving in 30 days. You're like, wait a minute.
Yes. Although I have had people do that, to be honest. But yeah. And so the first thing is I'm like, great, get your phone ready. You got a lot of calls to make, and do that research.
Well, I think some of the U.S. banks, you need to have a U.S. with the verification. You need a U.S. cell phone number because they wind up sending a text message with a code to log in. So some people have to really think about that. Like you may not want to cancel your US cell phone and get international coverage.
Yeah, you can do that with a SIM card sometimes, or I have clients who set up a VPN in the new country, and that is like a US VPN. I'm nobody's IT expert. I just know that they do it. I wouldn't be able to tell you much more than that.
Yeah. So when you have a couple coming in, do you have them kind of arguing in terms of like, well, I want to do this, I want to do that, and they're not seeing eye to eye? I mean, how do you manage that and get them on the same page or try to get them on the same page?
Yeah. So fortunately or not, for me, all I need to do is get them on the same page as to what they have, what assets they have, and what they have to spend. And we want to get them on the same page for that. And then how to spend it is above my pay grade. And so what I want to make sure, and again, this goes back to what I said a few minutes ago, where sometimes I have somebody who's like ready to spend and going out and doing all these things. And then sometimes I have somebody who's like, are you sure I can buy that muffin? And they're married to each other. And so what I like to do is say, look, you're going to need a place to live. This is how much you have each month. This is what percentage I think would be comfortable for you to spend on housing. And then they know, because, I'm the expert and I've said, this is what I think you can spend on housing. And then they can go out together and try to compromise on, neighborhoods and numbers of bedrooms and bathrooms and all of those good things.
Question. So your clients that have moved to Mexico, I mean, can you give me, and I know everyone's lifestyle is different. Some are buying, some are renting, some are moving to Mexico City, Puerto Vallarta, all over the place. Do you have like a base amount where you're like, look, guys, just on the bare minimum, just packing it up, doing this and this and this, it's going to cost you at least this much money. So that's the bare minimum that I'm just going to tell you you're going to need before we really dive into the nitty gritty and get all the true numbers. I mean, is there a baseline amount?
Do you mean for the move itself?
Yeah, for the move itself.
Yeah. I don't want to frighten anyone when I share numbers. I always, because you kind of get hung by numbers. But, in my perfect world for a couple, I would want them to have 25 to 50,000 of US dollars of cash in an account just to get them moved, get them into temporary housing or whatever they're going to do, Airbnb, whatever they're going to do until they figure out, what they're going to do more permanently, rent the car, get all the healthcare stuff taken care of, get everything taken care of. It's always good to have that kind of cash laying around. And then anything that is not used in the transition is part of their emergency fund, because everyone needs an emergency fund wherever they're living.
Sure.
So I like that kind of cash, even when somebody's just, I live in St. Louis and I'm going to retire in Wyoming. I'm still looking for that number.
Well, is that amount, would you say, for like a cushion for 6 months or a year, are you thinking? Or like what kind of a time frame?
Not really timed like that. It's more circumstantial in my mind, in the sense that, like, are both people moving at the same time? Does one person trail behind 3 months later? Are you renting the place that's still back in the US? You have to go meet the renters. You have somebody managing it. That whole, if I can place brackets around the move, I want you to have 25 to 50 USD so that you're not panicking and up at night because the renters just moved in and the pipe burst.
Yeah, sure.
And so
That's
I
fine.
want you to have that, or you just moved in and some pipe burst wherever you are. So I want you to have that. And, once the transition subsides, and as you rightly pointed out a few minutes ago, you're a resident now, then whatever's left over just becomes your emergency fund in retirement. And hopefully there are a lot of other assets, because an emergency fund typically when you're in your working life is to replace income if the income goes away. You're in a job, you get laid off. You need 6 months to find another job. We need 6 months of emergency fund. It's easy math. That's the math, right? But in retirement, it's not like that because there's no income to replace. And so what we want is 25 to 50 sitting around in case, heaven forbid, there's like a health issue or something like that.
Yeah. Well, that's life, right? Especially when you're a certain age, you're a baby boomer, and the aches and pains come more frequently than when you're in your 20s.
Dental work can be really expensive.
Yeah, sure. I have to tell you something. I just remembered something you said earlier about your firm charges an hourly fee. So your business model is quite different than most financial planners, because in my 18 years of selling real estate, I'm just going to put this out there. Whenever a client of mine says, well, I'm going to speak with my financial planner, I think maybe only one time the financial planner gave them a green light out of 18 years. Yeah. And they always said, no, we don't recommend you do this.
Of course.
Why do you think that is?
And the reason that is because that financial planner highly likely, is managing their assets. And so if I'm managing $1 million for somebody and, they came down here to Mexico and said, oh, okay, well, I need 200,000 of that to buy some place to live. My fee goes down. What I'm earning every year from this person goes down if I say, sure, why don't you take 200,000 and go live your dream? And that's the conflict of interest that's inherent in financial planning. Either somebody's selling you stuff and they're making commissions, in which case, my goodness, who knows what they're telling you to do, or they're managing your assets and they don't want those assets to decrease. And that's why I started this firm, because people understand paying people by the hour, right? You pay your lawyer, you pay your plumber by the hour. People understand getting advice by the hour, and we don't have those inconsistencies, those conflicts, right? I want you to be happy. I want you to live your dream. And so I'm going to do everything I can do to help you do that. And sometimes that means taking money out of accounts and using it to purchase a property. But that's probably the reason.
It's more self-serving than serving the client. Unfortunately, yeah. Yeah, because whenever people tell me that, I go, well, I'm not expecting your financial planner to tell you, you could afford this. And they can, but it is what it is, right? And look, there are real estate agents. They're not very forthcoming. I mean, there are, I don't want to say shady professionals, but I wouldn't call them professionals, but they're everywhere. You're the professional that you've hired to consult you and going to take care of you and looking out for your best interest, right?
Wants the best thing for you. Exactly.
Right.
And inherent in our model is us wanting the best for our clients. And that's why this firm exists. That's why I started this firm in 2016.
So if you could give one financial advice to every American thinking about retiring in Mexico, what would that be?
I would say, go see an expert and get advice that is in your best interest. You can do this. I mean, you can at least explore it to see if it can be done. Not everyone has the means to do it, but at least explore it and see if you can do it, and make sure you're getting expert advice that is in your best interest. And of course, the advice I give everybody whenever there's a life transition, accumulate cash. Just accumulate cash. It's never going to be the bad advice.
And, seeing about being able to do it, they might not be able to do it now, but if they speak to someone like you, they can start planning. And that means maybe in 3 years or 5 years, they'll be able to do it. But you're giving them information so they can decide, hey, you know what? It's not going to happen now, but it's in 3 years. Do I still really want to move down there and make it happen? But That's really key. Yeah.
I think it's always worth exploring people's dreams. Always. Yes.
So, our company motto here is live by design. And it's really blocking out all the negativity, the opinions of others, and doing your own due diligence and plan in advance, because, as far as we know, as of right now, technology is not there yet, but you only have one life. Yeah. Whether you believe in the afterlife, I don't think it's been proven it's there. Hopefully it is. But still, living the life you truly want to live is really important. And then and planning it to make sure that it actually happens and it's successful is really key, rather than I think it's really key. So Lori, thank you so very much for joining us today. And if someone wants to get a hold of you and your firm, what's the best way to get in contact?
So the best way is to send us an email, and you can send that to admin, ADMIN, @fearlessfinance.com, or you can jump on our site and fill out one of our forms and we'll be in touch with you. We would love to help.
Great. Well, thank you so much, Lori. We'll put your contact information and the details of the podcast. And thank you very much. And you know what? I might be reaching out to you in about a year or so down the road and see where things are at and continue this conversation.
I would love it. Thank you so much for having me.
Thank you, Lori. Have a great day. Your retirement in Mexico starts right here, and we're excited to be part of your journey. Every episode, we bring you the magic of Mexico, insider tips, and expert advice to help you take that next big step with confidence. Don't forget to subscribe and leave a rating and review on Apple Podcasts. It helps others like you discover the endless possibilities waiting south of the border. Got a topic you'd like for us to cover? We'd love to hear from you. Send your suggestions to info@tanielchemsing.com. And remember, a life well lived isn't left to chance. It's created with intention. See you next time.